Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome, everyone. This is Steve Meising, your host, the ISE webinar series. Today we have Steve Misic on the entry and exit strategies using ISE-FX options. Steve's with the Online Trading Academy. Just a couple of points, though. I just want to remind everyone, we at the ISE just launched podcasts, so you can go, for those of you, so a lot of you are going to be listening to podcasts because this is being taped, but for those of you that are here live now, you go to www.ise.com/podcast. So you can actually subscribe to the podcast, and all the material will be delivered right to your computer. If you have any questions regarding the ISE-FX options, I would urge you to go to www.ise.com/FX. There, on that site, we have the FX options weekly outlook, and that's another podcast that you can subscribe to each and every week. We have Jason Ayers from optionsource.net. He gives us a weekly perspective of what's going on. We also have trade alerts. So we have Trading Central, a group in Europe that makes some recommendations. So you can sign up for all this stuff at www.ise.com/FX. So I'm proud to present, we have Steve Misic. He's a guest speaker today. And Steve will be talking about entries and exits using ISE-FX options. He's an instructor with the Online Trading Academy, and he's done a lot of trading himself, and now he travels throughout the country teaching other investors on how he feels you could be successful. So without further ado, I want to introduce Steve Misic. Steve, thanks for joining us today.
Thank you, Steve. Hello, everybody. It's a pleasure to be here. I'm actually speaking to you today from Boston. I'm on the road. I'm actually teaching a spot Forex course in Boston this week. And they were kind enough to let me use a nice computer and a desk and a trade station platform so we can look at some live charts today. And also I will be going next week to the Los Angeles Center, Online Trading Academy Center, and teaching the spot Forex course there. So I just want to say that I really enjoyed last time I was here. I'm really happy to be back here again. I'm going to do a little presentation today, of course, that's going to be a little bit for everybody, I hope. There are plenty of people here that have more advanced than others when it comes to trading options, so I want to touch on some things for everybody a little bit. And we're going to get started here. Of course, we have to start off here with the little disclaimer when it comes to options. Everybody should read this. This information is available here, and of course there's plenty of places to get it. Your broker is required to provide it for you, so make sure you do read it and have a full understanding of what you're getting into when you trade any vehicle at all. Okay. And first page we want to talk about a little bit here. Since I was here last, it looks like Steve and the ISE has launched a couple of more pairs. The ISE has now launched the Australian dollar, and they've also launched the dollar versus a Swiss franc. Okay, and the new symbols, AUX and SFC. So these are new pairs that I am actually charting for the indexes. Okay. And we have them included in today's presentation so we can see what's been going on in those markets as well. Notice where it says here they are available through your option broker, exchange-listed securities, cash settled in your U.S. dollars, European-style exercise, and can be traded as spreads. And that's great news because, folks, if you haven't noticed out there, the FX markets are quiet. Okay. So some kind of spread trading, some kind of premium collection strategy is perfect for these periods where prices are as flat as they are right now. Okay. Since I am an instructor for the Online Trading Academy, we really want to stress to everybody that planning your trade is everything. The only thing that separates anybody from anybody who's a professional trader from an amateur trader is we always go in with a plan of attack. Okay? You start with your opinion, of course, about where you think the market's going to trade, and then put together a plan of attack that includes entries, exits, using stop losses, and profit targets. That is planning a trade. Entry, logical exits if you're wrong, and possible profit targets if you're right. Everybody has a different time frame that they're comfortable trading on. Some people are swing traders. Some people are position traders. Other people like to intraday trade. Online Trading Academy, that's what we specialize in, helping people to develop. We sit and we work with you. We have instructors that are capable of trading each one of the different styles. Okay. I personally, because I travel a lot, find that I need to trade swings and position trades simply because I'm teaching during the day and I need to have my positions on when I'm not available to sit and actually focus on trading a more intense style. So these kind of strategies are perfect. So once you put that trade on, then you must monitor your trade and, of course, review the results and then adjust your planning for the future. But it all revolves around planning, and I can't stress it enough. It's what separates the professional from the amateur. So I have to ask myself, whenever it's a market that I'm getting ready to trade, am I in a trading range or am I trending? If I'm trending, I'm making higher highs and higher lows in uptrends, lower highs and lower lows in downtrends. If I'm trading in a trading range, I'm bumping up against an area of resistance on the top and support on the bottom. I have to use different strategies if I plan on trading in these types of markets. I cannot trade a range-bound strategy in a trend, otherwise it will constantly be shorting an uptrend or buying dips in a downtrend. And so I have to shift my focus depending on what the market is giving me. Okay? And so the strategy and the kind of time frame that you're going to trade on, again, is going to be a function of your particular trading style. Draw your initial trend lines in uptrends or downtrends across the highs and the lows. Or if you see a range-bound market, draw your horizontal trend lines. Okay? Trending markets, of course, vertical trend lines. When you are watching your markets, you will start to get hints many times before the turn actually happens, early on in the turn, inside the trading range based on some developing chart patterns. And the most common ones are going to be pennants, flags, double tops and double bottoms at the top and bottom of the ranges, okay? Triangles, ascending triangles for upside breakouts, descending triangles for downside breakouts. These patterns usually precede or confirm some of the trend moves, okay? So your chart patterns that form inside a trading range are called reversal patterns, again, the double top and the double bottom. And chart patterns that form once price leaves a trading range are called trend continuation patterns. So for example, a trend continuation pattern would be a bull flag or a bear flag, a pennant, okay? Ascending triangles that form inside a trading range, again, usually signal that there's going to be an upside breakout. So we want to watch these kind of developments up very, very close.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.